More volatility across the currency markets, with Kazakhstan devaluing its Tenge currency, removing its peg to the US dollar. All right, take a look at the Tenge, down 28% or so against the dollar. This comes just over 1 week after China devalued its yuan currency. So which countries are next in this so-called currency war that may be brewing? I want to bring in Jan Randolph, Director of Sovereign Risk at IHS, with me now from London. And Jan, your reaction to the devaluation of the Tenge coming on the heels of the downward spiral in oil prices, right?
Yeah, I don't think it's surprising. All emerging market currencies are under pressure for reasons to do with, one, slowdown in China, two, the fall in oil prices again, and that now being dovetailed by commodities. The timing is interesting, though. It does come after the Chinese decided to take a step back from a close management of their currency, a halfway house towards a free float. And I think Kazakhstan have decided to do this as well, but they have the additional pressure from Russia. Russia's ruble has also been falling. And we forget that apart from the oil trade, the non-oil trade for Kazakhstan is very much linked to Russia as an export market. And it's been moving into deficit.
Right.
And that's the other timing reason why they've devalued.
All right, and which countries do you think are next to devalue their currency?
Well, I think all countries that are commodity exporters, energy exporters, have China as an important market, will feel the pressure. We're also witnessing at the financial level outflows, financial capital outflows, with the anticipation of rising rates in the US and weaker growth in emerging markets, if not recession. All that adds up to downside risk for emerging market currencies. I think what is interesting is the number of emerging market countries that have decided to decouple completely, and Vietnam is another example. It's not just Kazakhstan.
Right, but Jan, which countries specifically do you think are next?
Well, I think in the CIS region, we forget how difficult the Russian situation is, and Russian contagion is very profound, both through the economic linkage, trading back to Russia, but also the financial. So any of the stands are vulnerable. Azerbaijan could possibly devalue again. They devalued back in March and decoupled from the dollar peg. Emerging markets overall will continue to be under pressure while we have slowdown in China and commodity weakness.
And Jan, just real quick, because we're running out of time, but what does this mean for the Fed and its looming policy shift? I mean, rising rates would add even more steam to an already strong dollar, which has been propped up by all the volatility in the FX markets.
Yeah, from the US perspective, watching this, it's not good news for growth. Global growth is going to be weaker. Emerging markets had supported global growth more so than the advanced economies since 2009. Now that's falling. And the net export driver, will be much more difficult for the US. The Fed will have to calculate that in when it makes a decision.
All right, Jan Randolph, the Director of Sovereign Risk at IHS, with us now from London. Thanks very much for your time. I'm Scott Gamm, and you're watching The Street.